Okay, welcome back. And today we're going to be looking over a different trading strategy known as Elliot Wave theories. And I've noticed this being fairly successful by quite a few people that I've been watching some YouTube videos on that we'll leave links for down below. So what is Elliot and who is this dude? Ralph Nelson Elliot was born in Marysville, Kansas, July 28, 1871. And what he really did was he looked at trends, especially in the stock market. And he noticed that there were certain patterns that he saw that repeated themselves over and over again. And these created waves. And so he came up with certain price movements and fractals that included impulsive and corrective waves. And we're going to be looking at what those are. He also created the 5-3 cycle, and we'll look at what that is. So what he did is he studied 75 years of past market data, and he noticed that there was 5 swings in the direction of the larger trend and 3 swings that actually went downwards. And then it kind of starts again. That was always my question too. So he calls these waves, okay? And we're going to be looking at what these waves actually are. Okay, what an impulsive wave is it's going in the direction of the trend, so that we see the trend going this way. So your impulsive waves are wave 1, wave 2, and wave 4. I'm sorry, wave 1, wave 3, and wave 4. 2 and 4 are coming back down. And so these are called corrective waves. And we see those over and over in the market. And then what happens once we get a peak? We usually sometimes get a double top, which we'll see in some of the fractals that I'll show you in a little while. But we also get something called an ABC move back downwards. So we have an A movement, a B movement, and a C movement. Now this is in the direction it's going this way. So these would be your impulsive waves, and this would be your corrective wave because it's correcting towards the downside in this case. All right, so we're going to go over a couple different trading strategies and some possible entry points. Did you notice that this is how they connect? Because I always wondered ABC, and then it starts another one. Now there are some rules that have to be followed in order for Elliott waves right here, in order to them to ensure that your trading strategy is solid. So the first rule is that wave 2 cannot move past the start of wave 1. So you see that the wave 1 goes up here. 2 cannot go below this line. Otherwise, we start the whole fractal all over again. All right. And usually that's at around 50 to 61% drop, okay, in value. And we'll see that from a Fibonacci retracement, which I will throw in a little bit later and explain what those are. All right, so now let's look at wave 3. Wave 3 cannot be the shortest wave of the 3 impulse waves, 1, 3, and 5. Now, we don't know that, right? We don't know that until we get done with 5. So how are we going to find an entry point into this? Usually what we'll see is wave 3 is longer than wave 1. Let's keep that real simple. Wave 3 is longer than wave 1, and we got a good shot at this. All right. The third rule is wave 1 and 4 must not overlap. What does that mean? 1 and 4. So 4 cannot retrace down to here. Its low has got to be above the high on wave 1. So we have a few of those rules. They're right here. And so we're going to take a look at some examples. So again, this is the Elliott Wave Trading theory, and it's showing that on a trend upwards or a trend downwards, we're still going to see the same pattern. Okay, so we have 1 and a corrective wave, 2 and a corrective wave, and 3 is the wave down. This is not the shortest wave, so it does meet that. There's your neckline, and it's showing it from what happened previously to it. So what do we see? Sometimes we have to catch this. It has to go and reverse the trend, and it goes upwards for 2. And now it can start its movement all over again. So if you're in a downward market, you need to watch this, is what I'm kind of indicating right now. Is this going on until we see a reversal of this pattern where we start getting higher highs and higher lows, okay? And we start reversing this and going back into an uptrend. And here it is, target for D wave. Okay, D wave right here, it's coming in here. We know that at the end of E, this is an arrow that's built. So we're going from the top of one wave and we're just using a retracement arrow to kind of follow that. And we're using our ABC, so our AC guideline, okay, and possibly what they're using D and E to connect to see where the direction is. Is there a possible change in direction? All right, so that's one of the things I kind of wanted to go over.
All these parts.
And then we have channels too. So there's a channel between 1 and 3 and 2 and 4, which we call C, A, B, C, okay? So there's a channel at which we know this is a what? This is an upward trend. So we can see the trend quite clearly by doing that. I'm going to go to Trading View and show you. I also wanted to go up. What are Fibonacci levels? These are just retracement levels. Okay, they're horizontal lines that indicate where support and resistance is likely to occur. So where we think we have our support and resistance lines, they're already kind of mathematically formulated out for you by a man in the 13th century. I'm sure his name was Fibonacci. It actually was. It was an Italian mathematician. All right, but the levels are 28.3, 38.2, 61.8, and 78.6. And you'll see them sometimes as 0.78 or 0.61, 0.38, okay, the 0.38 line. And then also you have a 0.50 over the midline of your 50% indicator. And now we're going to look at some of those in actual motion. So let's go over here to BTC and let's see if we can find a retracement level that happened with Bitcoin. And sometimes you're going to get a double top up here, okay? But we can still see even patterns within patterns. Now we're using the day time frame, okay? I can zoom this out and use a weekly time frame as well. So it doesn't really matter the time frames. I'm just going to kind of expand it so that we can see these retracements a little bit better, okay? And we're going to go over here to where we had the last swing high and the last swing low, okay? All right, so from right here, let's see if we can draw our line. We have a low and we have a high, okay? We also have a low down here, which is actually the actual spot. Oh, I don't know if I did it correctly. All right. Stop that and put in another one down to here. Let's see if it'll work. Nope, it doesn't like it. Okay. We're going to put one here and up to here. Grab another one. Do that. Okay. So here's our wave 1. Here's our corrective wave. Okay. Let's go to our wave 2. Wave 3. So we have wave 3 here. Okay. We also have down to here. And you have to kind of look for some of these needles sometimes. It's a hammer. It's a real powerful tool. Okay. And we're going to do one to here. And then finally, our last wave upwards. Whoops, it's a little too high. Come on, boy. Down, down, down. All right, right there. All right, so we have wave 1, we have wave 2, we have wave 3, and we have wave 4, this corrective one, and wave 5. And let's see if that meets our standards. Is wave 3 the shortest one? No, it's not. Obviously, this is the shortest one. Does wave 2 go below 50% of the bottom of wave one? And the answer is no. Does this corrective wave also, this wave four, does it go beyond the top of wave three? And the answer is no. So far, this meets a Fibonacci and a retracement. Now, I'm going to put on some other ones and let's find our ABCs. Let's see if I can do that. So I'm going to go from the top and I'm going to go down to our first major retracement levels right here. Okay. That was a big one. Let's go to the next one. The next one went from here and it went up to just up here. Okay. And then now we're going here to here. And so what do we have? We have our A, our B, and our C right now. Okay. Did it meet the requirements for it? Okay. This one did not fall anywhere below this one. And this one retraced and didn't fall below our beginning. Okay. So our ABC is also in line. So when they say a 5-3 count, they're looking at wave one, wave two, wave three, wave four, wave five. A, B, C. And we're seeing the patterns start to go over again. So this is not for financial advice. We're now seeing a retracement of switch. Isn't that what we expected? We probably expect it to go up someplace and test this range again. Now, how far it gets between there, let's see if we can get some horizontal lines on this case. All right, so we have a line here and we have a line about right here. Okay, and it's showing me that this is 0.818. And actually what we're going to do is we're going to get an indicator and we're going to look at Fibonacci and we're going to go Fibonacci retracement. Okay, and we're going to add that now to it. And now we can quite clearly see when I zoom in on these things exactly where this retracement is. And there you go. Remember what we talked about? And it said it can get up to the 1.6 on some of these. The retracement will clearly show where this is at. This is the 0.382 and this is the 0.786. So when you see these are real good lines to indicate, again, are we in an area that is obviously either overbought or oversold? We know down here it was oversold. Okay, we should have known that we were coming to here. As soon as we saw this bar right here, okay, that's a great entry point. It's telling you that the possible reversal. When we saw it, remember this is a weekly time span right here. Okay, within that week, we should have recognized that even within the beginning of the second week, that this is going to continue to go upwards. Okay, this is just a prediction. Can it go back down? Sure, because we could start our 1, 2, 3, 4, 5 again. But what do we plan to see within the next, I don't know, couple weeks? We plan to see an ABC, maybe just an A. I'm sorry, a number one. All right. I know this is a lot. I'm going to put in a quiz for you as well. Where's my quiz? All right. In case you want to plan and you want to test yourself to see whether you actually could get some of these right, which of the following is not a hard rule of that. Wave 2 cannot retrace more than 100%. No, we know that. End of wave 3 reaction sequence is typically near the end of wave 4, not necessarily. Wave 4 can never overlap wave 9. Yes, wave 3 can never be the shortest of the three. This one is obviously the wrong one. Okay, ba-boom. All right, we get it right. It won't tell me right now. You have to sign up for free. All right, there they are. Okay, and so you can kind of get a quiz on that. All right, as always, I hope this is helpful and lets you recognize practice. Practice looking at these trends. The trend is your friend. As always, peace out. God bless. Have a wonderful, wonderful evening.